Hello traders, it's Greg from Master Trader. I want to be talking about classic M&W patterns. We're going to be doing an MT Live on this on Wednesday. So we'll do a little preview of what we're talking about and what the patterns are about. Let's just start with a little drawing tool here. It's a pretty simple pattern. The way we like to see them is forming after an extended run, which implies that prices are going to pull back. Now, it's in an uptrend, so we give the benefit of the doubt. Trends can go on for a long time, even further than we believe that they will, which might seem illogical at the time, but we see it all the time, especially if they start from a consolidation, rather than if they were to pull back and then make another run. Those are much more likely to start to pull back in a more meaningful way. Nonetheless, what we're looking for with these patterns is an extended run, and then it begins to roll over. It's a shallow retracement. It'll usually pivot, and by pivot, what we look for is just 3 lower high bars, and they can be side to side, just lower high bars to the left and right, and that creates a little resistance point. Now, the shallow pullback, at Master Trader, we're always looking at what's the psychology behind the pattern. Not that it pulled back a certain increment based on something subjective like a Fibonacci retracement or a wave. We're just looking for it to be a shallow pullback, which communicates to us that traders are aggressive. Now, the problem with shallow pullbacks is this little pivot area created an area of price resistance where those that thought it would keep going up, it failed to do so. So as it begins to turn up again, where those aggressive buyers come in, again, sellers are going to be right here. Now, at times the pattern can go up. It might take it out a little bit, and then it begins to roll over. And as you can see, it's forming an M. Now, the reverse of that is it goes down, and it begins to turn, and we get the same type of pivot situation. We don't know how it's going to form. We're just looking for something to have 3 lower high bars. It consolidates, and now we have fear and some accumulation. And as it goes up, we know that there's going to be sellers coming in again because of the move down, and it makes a shallow move, and those that come in to sell or short it, the area of support is close by. As it comes in, buyers step up again, and that can start a larger move to the upside. Let's look at a few examples. So I picked Bitcoin here. It's an interesting pattern where it went down a lot. It ebbed and flowed down, and you can see the pivot highs and the pivot lows that are marked. And then see the wide range bar and the bottoming tail bar. It starts to bottom, and it pivots. And as it goes up, I picked this because it's got a W and an M. It's not a classic M because it didn't go up and accelerate higher. Nonetheless, it came up and it formed a pivot high, and then it retested and it went down. So the pivot low, the right side of the W, is close by, and there are buyers here. And now we apply our candlestick patterns, bar by bar analysis is what happened, and it begins to turn back up again. The concept here, it's a simple concept, is that where there were buyers before, they'll show up again. Where there were sellers before, they'll show up again. In this case, it was in a downtrend. We would over here look to the left to see is it near an area of price support, because if there is, that adds to our analysis and the probability of this actually being a successful type of a pattern. Now, the first time it begins to turn, sellers are going to be aggressive because it's in a downtrend. Now, when it comes down here again, it's close by, buyers show up again, and we apply what we call bar by bar analysis. Now, this is what's called the neckline of this pattern. It's really a trading range here. But now if it can clear this, now we go on to new patterns, meaning pullbacks, could be basing and breakouts as prices continue to go to the upside again. And we can apply this to anything that we trade. I'm just looking at a few patterns. We don't have that in gold, in oil. We don't have, well, here's a little type of a W type of a pattern. It doesn't have to be exact, right? Get the concept down, is that it accelerated down, it pivoted, and it retests it. Sometimes it goes below the left side, sometimes it's above, but it's a retest pattern that starts a new move. So I hope that helps. If any questions, email myself, Greg at Master Trader, or Dan at Master Trader. And MT Live this Wednesday, if you can be there, join us on YouTube or in our chat room.